Welcome back to the Crew Ticker Podcast, everyone, your Friday morning edition covering major financial magazine headlines. Get ready for a deep dive into the global markets with a special focus on what's going on in the Asia-Pacific region.
It's pretty amazing to see how global events and President Trump's policies are affecting things across markets, especially in Asia.
Definitely. So let's jump right in. I was looking at CNBC's live market blog this morning, and they're talking about how Asian-Pacific markets reacted to President Trump signing that reciprocal tariff plan.
Right, it's been all over the headlines.
But to be honest, I'm a little fuzzy in the details. Can you remind me what a reciprocal tariff plan actually is?
Sure thing. It's basically a plan that lets the U.S. put tariffs on imports from countries that have higher tariffs on U.S. goods.
So it's all about leveling the playing field, making things fair.
Exactly. The idea is to encourage fairer trade practices.
Gotcha. Makes sense. So how did those Asian markets react to the news?
It's a real mix, actually. Some markets are looking at it positively, and others seem a bit more hesitant, like mainland China's CSI 300 index actually closed up by 0.87%.
Okay, so some optimism there.
Yeah, but then you look at Japan's Nikkei 225, and it ended the day down by 0.79%.
Huh. So different reactions depending on the country. Makes you wonder about the different impacts these trade policies could have.
For sure, it really highlights the varying levels of confidence and how differently each country might be impacted.
Absolutely. Now, I saw some headlines about the Hang Seng Index doing pretty well.
Yes, Hong Kong. That's right. The Hang Seng was up a whopping 3.48% in the last hour of trading, which puts it on track for its biggest weekly gain since October, at least according to CNBC.
Wow. So investors in Hong Kong are feeling pretty good about things.
Seems like it. They might be anticipating some positive results from potential trade negotiations.
Interesting. So lots of uncertainty, but also some potential opportunities depending on how things shake out. Now, has this uncertainty affected any companies directly?
Oh, definitely. I was reading in the Financial Times that the fast fashion giant Shein might actually push back its London listing until the second half of 2025.
Wow. Really? Why is that?
It could be because of President Trump's stance on those tariff-free imports for lower-priced items, the smaller stuff.
Ah, I see. So Shein's playing it safe, waiting for the trade winds to settle a bit.
Seems like a smart move.
Yeah, makes you think about how other companies might be changing their plans with all this trade stuff going on.
Definitely makes you wonder.
Speaking of companies making moves, what's the latest with Nissan? I heard something about a potential investment.
Yeah, CNBC is reporting that shares in Nissan Motor jumped as much as 8.4% on Friday.
8.4%? That's huge. What happened?
Well, there are reports that KKR, a global investment firm, is thinking about investing in the automaker.
Interesting. And this is right after Nissan and Honda Motor called off their merger talks, right?
Yeah, exactly.
So this KKR thing is a pretty big deal.
It definitely is, especially since Nissan also just lowered its operating profit forecast.
It's like a lifeline for them.
Maybe KKR sees some potential there. They're known for their restructuring abilities, so they might be betting on turning Nissan around.
It's a bold move, that's for sure, especially with all the uncertainty in the global auto market these days. Okay, let's switch gear for a second and talk about how U.S. stocks are doing. I've been seeing a lot of positive headlines.
Yeah, U.S. stocks have been doing pretty well lately. Both CNBC and MarketWatch have been reporting on it.
So what are the major indexes looking like?
Well, the Dow Jones Industrial Average, the S&P 500, and the Nasdaq Composite have all seen gains in the past few days.
That's good news. Any idea what's driving this positive performance?
It seems like it might be tied to President Trump's recent actions, and all that talk about tariffs. Investors might be feeling a little bit better about the trade situation.
Makes sense. So they're reacting to that. But we all know things could change pretty quickly.
Oh, absolutely. Market sentiment can be super fickle. It's definitely a wait-and-see situation.
For sure. Okay, we can't talk about market uncertainty without talking about gold, right? It's the classic safe haven asset.
Absolutely. Gold is always the go-to when things get a little shaky.
So what are we seeing with gold prices?
They're soaring. Both Bloomberg and CNBC are reporting that gold is trading near record highs.
Really? Why is that?
Probably due to those concerns about global trade tensions and President Trump's announcements on tariffs.
Right, so investors are hedging their bets, turning to gold to protect their assets.
Exactly. And it's not just individual investors. Analysts like Citigroup Inc. are predicting that gold could hit $3,000 an ounce in the next few months.
$3,000. Wow, that's quite a prediction.
Yeah, it is. And central banks, including China's, have been increasing their gold reserves too.
So gold is definitely back in the spotlight.
You could say that it's a reminder that even in this digital age, traditional assets like gold still have a lot of value.
Especially when things are uncertain. All right, let's dive into some more company-specific news, particularly in the tech and crypto world. I was reading an article in MarketWatch about Coinbase Global Inc. reporting some pretty impressive earnings for 2024.
Yeah, their revenue more than doubled.
That's amazing, especially considering how much the crypto market has fluctuated over the years. What's making them so optimistic?
They think that the era of regulation via enforcement in the U.S. is on its way out.
And that's a good thing.
For them, it is. It's partly because of the Trump administration's push to make the U.S. a crypto hub.
Okay. So they see that as a positive development.
Yeah, it signals a potential shift towards a more crypto-friendly regulatory environment, which could lead to more growth and innovation in the sector.
That's interesting. It's kind of funny. President Trump's stance on trade and tariffs seems to be creating uncertainty in some areas of the market. But in the crypto world, he's seen as a positive force.
It's definitely a complex dynamic, but Coinbase's performance and their positive outlook suggest that the crypto market is finding its footing, even with all those regulatory challenges.
Absolutely. Now, here's a piece of news that ties directly into that whole crypto optimism thing. MarketWatch is reporting that Bitcoin could see a $23 billion inflow.
Wow, $23 billion. That's a lot of money.
It is. Apparently, if 18 states pass these bills to establish state-level Bitcoin reserves, Bitcoin could see that massive inflow.
That's a pretty big deal.
It is, and it's all being fueled by President Trump's support for crypto and his plan to build a strategic Bitcoin reserve at the federal level.
So it's like a top-down push for crypto.
It really is, and there's all this talk about different ways to fund these reserves, like using state pension funds or even tax revenue.
It's fascinating to see how quickly this movement towards state-level Bitcoin reserves is picking up steam. It's almost like a race to see who can become a leader in the crypto world.
And the rationale.
Well, some people argue that establishing Bitcoin reserves could help states diversify their investments, hedge against inflation, and attract crypto businesses and talent. But there are also those who are worried about Bitcoin's volatility and the risks of investing public funds in something so new.
So it's a calculated risk with potentially big rewards, but also pretty serious downsides.
Exactly. It'll be interesting to see how it all plays out. Okay, let's shift gears again and talk about Intel, what's going on with their stock surge and the government's involvement in their future.
Yeah, I saw headlines about that too.
The Wall Street Journal and MarketWatch have both been covering it. It seems like Intel's stock has shot up by 22%.
22%, that's a huge jump.
It's all thanks to Vice President Vance's speech where he talked about how committed the White House is to domestic chip production.
Right, I remember hearing about that.
Now there's this speculation about a potential partnership between Intel and TSMC.
TSMC, who are they?
Taiwan Semiconductor Manufacturing, they're a big player in the chip-making world.
And the government might back this partnership.
That's what people are saying. It makes sense, though. Given the current geopolitical climate, the government wants to support American companies, especially in such a critical industry.
Totally makes sense. Intel's the only U.S.-based chip maker that can really compete at the highest level. And with all the potential tensions with China and Taiwan, their role is more important than ever.
Couldn't agree more. But here's where things get interesting. While Intel's stock is skyrocketing and everyone's talking about government support, they're also facing some serious operational challenges.
Oh, like what?
Well, their foundry business, the part of the operation that actually makes the chips, is struggling. They're losing a lot of money.
So they're not as efficient as they would be.
Not exactly, and it's a stark contrast to TSMC. They've got a really successful and profitable foundry operation.
So what's the difference? Why is Intel having trouble when TSMC is doing so well?
It comes down to how they operate. Intel has historically focused on manufacturing chips based only on their own designs.
So they've been kind of closed off.
Exactly. TSMC, on the other hand, has always been more open. They manufacture chips for tons of different companies and designs.
So they've been able to adapt more easily.
Exactly. Their flexibility has made them a major player in the global chip market.
So it sounds like Intel needs to change its approach if it wants to catch up. Do you think this partnership with TSMC could help?
Maybe TSMC's expertise in manufacturing could be a good match for Intel's strengths in design and innovation.
Yeah, I see how that could work. But would they be able to put aside their differences? They have different company cultures, different ways of doing things, and maybe even conflicting goals.
Those are all good points. It's not a guaranteed success story by any means.
Right, and even with the government's help, Intel has a long way to go. It shows how tough the semiconductor industry was and how hard it is to stay ahead of the game. Okay, let's move on to something a little different. The rental market. The Wall Street Journal has an article about how rent prices could be going up and what that means for inflation. What's the story there?
Well, it seems like the rental market is changing big time. It's going from renter-friendly to landlord-friendly.
What's driving that change?
A few things. First, demand for rentals is going up because more people are choosing to rent for longer periods.
Why is that?
High mortgage rates are making it harder to buy at home. Plus, there are just more people competing for the available rental units.
So classic supply and demand. Less supply, more demand, prices go up.
Exactly. And the Journal thinks this trend is going to continue. They're predicting rent growth across all the major cities by the end of the year.
Yikes. So what does that mean for the economy?
Well, for one thing, it could push inflation higher. Housing costs are a big part of the consumer price index, so if rents go up, it makes it harder for the Fed to reach its 2% inflation target.
Right? And what does that mean for things like interest rates?
The Fed might have to reconsider their plans to cut rates. They might even have to raise them to fight inflation.
So this rental market shift could have a domino effect on the whole economy.
Exactly. It's a lot to think about. The Journal also mentioned how President Trump's policies could affect all this too.
How so?
Well, his stance on immigration could make the labor shortage in construction even worse. It'll be harder and more expensive to build new housing.
I see. So his policies, which are meant to protect American jobs, could actually end up driving up housing costs and making it harder for people to find a place to live.
It's a classic example of unintended consequences. It really shows how interconnected everything is, how decisions in one area can have ripple effects across the board.
Absolutely. It's a complex situation with a lot of moving parts, and it shows how seemingly unrelated events, from global trade to the housing market, can have a huge impact on our lives. It makes you realize that we're not just watching this global economy unfold from the sidelines.
Right, we're all part of it, whether we realize it or not.
Exactly. Our decisions every day contribute to these bigger trends in ways we might not even imagine. It's a lot to take in. But as always, I appreciate you helping us connect the dots and make sense of it all.
Happy to do it. I think it's so important for people to understand what's going on in the economy, especially these days when things are changing so fast.
I couldn't agree more. Now, before we move on to the next part of our deep dive, I want to circle back to something we talked about earlier. President Trump's plan to create a strategic Bitcoin reserve at the federal level. What's the latest on that?
It's still in the proposal stage, but it's definitely causing a stir in the financial world. Forbes had an article about it recently. President Trump sees it as a way for the U.S. to solidify its position as the leader in the crypto space.
So it's not just about diversifying assets or hedging against inflation. It's about maintaining America's dominance in this new tech and financial landscape.
You got it. And it fits right in with his administration's efforts to make the U.S. more crypto-friendly. Remember Coinbase and their optimism about the era of regulation via enforcement ending? This Bitcoin reserve proposal seems like another step in that direction.
It's a bold move, for sure, but it does raise some important questions. How would they even fund this reserve? What would the impact be on the entire crypto market? And what about the risks of putting public funds into such a volatile asset?
All valid concerns. And the debate about this proposal is just getting started. Some experts think it could be a game changer for Bitcoin, that it could boost its value and make it more mainstream. Others are worried about the risks, pointing to Bitcoin's price swings and the potential for manipulation.
It's definitely a gamble, but one that President Trump seems willing to take. It'll be interesting to see how this unfolds.
Absolutely. It's a developing story that could change the global financial landscape, and we'll definitely keep our listeners updated as things progress.
Okay, now let's shift gears one last time and focus on something that affects us all pretty directly. The cost of living, specifically the rising cost of rent. We touched on this earlier, but I want to dig a little deeper into what it all means.
It's definitely a hot topic, especially for younger generations and people in cities where rent is going through the roof. The Wall Street Journal did a great article about it, exploring why rents are going up and what it means for people and the economy.
They talked about how the rental market is shifting from renter-friendly to landlord-friendly. What's behind that shift? Is it just supply and demand, or is there more to it?
It's a mix of things. On the demand side, you have more and more people choosing their rent for longer periods because of those high mortgage rates and affordability issues. It's especially tough for millennials and Gen Z who are putting off buying a home because of student loan debt and low wages.
It's a double whammy. High rents and a tough time getting into the housing market.
Exactly. And then on the supply side, there just aren't enough affordable places to rent. Construction of new apartments and houses hasn't kept up with the demand. And in some places, it's hard to build new developments because of zoning laws and community pushback.
So you have a perfect storm brewing, high demand, low supply, and regulations making things even harder. No wonder rents are going up.
Right. And then the Wall Street Journal brought up another interesting point. President Trump's policies might be playing a role, too.
Oh, really? How so?
His stance on immigration could actually make the labor shortage in the construction industry even worse, making it more difficult and costly to build new housing.
I see. So his policies, which are designed to protect American jobs, might actually be contributing to higher housing costs, making it harder for people to find affordable places to live.
It's complicated, right? Unintended consequences are everywhere. It shows how interconnected everything is, how decisions in one area, like immigration policy, can affect something completely different, like the housing market.
Absolutely. It's all one big system with a ton of moving parts. It's a lot to process, but it's really important to understand these connections if we want to solve these problems.
I couldn't agree more.
So before we wrap up this part of our deep dive, I want to get your overall take on the global economic outlook. Given everything we've discussed today, where do you think things are headed?
That's the million-dollar question, isn't it? It's what all the economists and analysts are trying to figure out. And honestly, there's no easy answer. The global economy is facing a ton of challenges, from trade wars and political instability to climate change and technological disruption.
It feels like there's a lot of uncertainty and volatility in the air. So, are there any signs of hope? Or are we heading for a rough ride?
Well, there are definitely risks and challenges, but I think there are also reasons to be cautiously optimistic. Emerging markets are still growing, and new technologies are creating new opportunities. The key is how well governments and businesses can adapt to this changing landscape.
So it's all about being flexible and resilient, not just weathering the storm, but finding ways to thrive in the middle of all this change.
That's a great way to put it. It's a time for both caution and boldness. We need to be aware of the risks, but also open to new possibilities.
I like that. Now let's take a quick break, and when we come back, we'll continue our deep dive into these major financial magazine headlines.
Sounds good. Yeah, it really is amazing how interconnected all these economic factors are. Something that might seem like an isolated event can actually have a ripple effect across the whole system.
Like a domino effect. One thing leads to another, and it makes you realize that we're not just watching this global economy from a distance.
Exactly. We're all participants. Our decisions, whether it's what we buy or where we put our money or even our career choices, they all contribute to these big economic shifts.
It's a lot to think about, but it's so important to understand how it all works. And as always, I appreciate you helping us connect those dots.
My pleasure. I think it's crucial to help people understand the economy and empower them to make smart decisions, especially in times like these when things are so unpredictable and constantly changing.
Absolutely. Couldn't agree more. Now, before we move on to our last segment for today, I want to go back to something we talked about earlier, President Trump's idea to create a strategic Bitcoin reserve at the federal level. What's the latest on that?
Well, it's still just a proposal, but it's definitely generating a lot of buzz in the financial world. I was reading an article in Forbes recently, and it seems like President Trump sees this reserve as a way to make sure the U.S. stays on top in the crypto space.
So it's not just about diversifying assets or hedging against inflation. It's about maintaining America's dominance in this new technological and financial landscape.
Exactly. And it aligns with his administration's overall goal of making the U.S. a crypto-friendly place. Remember how optimistic Coinbase was about the era of regulation via enforcement coming to an end? This Bitcoin reserve proposal seems like another step in that direction.
It's a bold move for sure, but it raises some big questions. How would they even fund this reserve? What would the impact be on the crypto market as whole? And what about the risks of putting taxpayer money into something as volatile as Bitcoin?
Those are all important points, and the debate is really heating up. Some experts believe it could be a game changer for Bitcoin, driving up its value and making it a more mainstream asset. Others are more cautious, pointing to its volatility and the potential for market manipulation.
It's a gamble, no doubt about it. But it seems like President Trump is willing to take it. It'll be fascinating to watch how this plays out in the months and years ahead.
Absolutely. It's a developing story that could have a major impact on the global financial system, and we'll definitely keep our listeners in the loop as things progress.
Okay, now let's shift gears one last time and talk about something that affects everyone's wallet. The rising cost of rent. We touched on this earlier, but I want to take a closer look at the potential implications.
It's a real concern for a lot of people, especially young people and those living in cities where rents are skyrocketing. The Wall Street Journal had a really insightful article about this, exploring the reasons behind these rising rents and what it could mean for individuals and the economy as a whole.
They made the point that the rental market is going from renter-friendly to landlord-friendly. What's causing that shift? Is it all about supply and demand, or are there other factors at play?
It's a combination of factors. On the demand side, more people are choosing to rent for longer periods because it's harder to buy a home with those high mortgage rates. Plus, there's just more competition for the available rental units.
So it's a double whammy for a lot of young people. High rents and a tough time breaking into the housing market.
Exactly. And on the supply side, there's a shortage of affordable housing. Construction of new rental units hasn't kept up with the rising demand. And in some areas, zoning regulations and community opposition make it even harder to build new developments.
So it's a perfect storm. High demand, low supply, and regulations making things even tougher. No wonder rents are going up.
Right. And then the Wall Street Journal pointed out another interesting angle: President Trump's policies might be contributing to the problem.
Really? How so?
Well, his stance on immigration could be making the labor shortage in the construction industry worse, which makes it more difficult and more expensive to build new housing.
I see. So his policies, which are meant to protect American jobs, might actually be pushing up housing costs and making it harder for people to find an affordable place to live.
It's a complex issue with unintended consequences. It really highlights how interconnected everything is. How decisions in one area, like immigration, can affect something seemingly unrelated, like the housing market.
It's all part of one big system, right? And understanding these connections is crucial if we want to address these challenges effectively.
I couldn't agree more.
So before we wrap things up, I want to step back for a minute and ask you a broader question. Given all these events and trends we've discussed, what's your overall take on the global economic outlook?
That's the question everyone wants answered, isn't it? And the truth is, there's no simple answer. The global economy is facing a lot of challenges, from trade tensions and geopolitical instability to climate change and technological disruption.
It definitely feels like there's a lot of uncertainty and volatility out there. Are there any bright spots? Or are we in for a bumpy ride?
Well, there are definitely risks, but I also think there's room for cautious optimism. Emerging markets are still growing, and new technologies are creating opportunities. The key is how well governments and businesses can navigate these choppy waters and adapt to this changing world.
So adaptability and resilience are key in today's world. It's not just about surviving the storm. It's about finding ways to thrive in the midst of all this change.
Perfectly said. It's a time for both caution and boldness. We need to be aware of the risks, but also open to embracing new possibilities.
I like that. Now, let's turn our attention to something a little closer to home, the rental market. We talked about this earlier, but I want to dig a little deeper into why rents are rising and what it means for the economy.
It's definitely a topic that's on a lot of people's minds, especially younger generations and those living in urban areas where rent prices are really climbing. The Wall Street Journal did a great piece on this, exploring the factors driving these increases and the potential consequences.
They pointed out that the rental market is shifting away from a renter-friendly environment to one that favors landlords. What's fueling this shift? Is it purely a supply and demand issue, or are there other forces at play?
It's definitely a combination of factors. On the demand side, you have more and more people choosing to rent for longer periods due to high mortgage rates and concerns about affordability. This trend is particularly noticeable among millennials and Gen Z, who are delaying homeownership because of student loan debt and stagnant wages.
So they're getting hit with a double whammy, rising rents, and a tough time entering the housing market.
Exactly. And on the supply side, there's just not enough affordable housing being built. Construction of new rental units hasn't kept pace with the growing demand, and in some areas, zoning regulations and pushback from communities make it difficult to create new developments.
So you have this perfect storm, high demand, limited supply, and regulatory hurdles. It's no wonder rent prices are soaring.
You got it. And the Wall Street Journal also raised an interesting point about how President Trump's policies might be impacting this issue.
Oh, really? In what way?
Well, his stance on immigration could actually exacerbate the labor shortage in the construction industry, making it even more difficult and expensive to build new housing.
So his policies, which are often framed in terms of economic nationalism or protectionism, could actually be contributing to rising housing costs, making it harder for people to find affordable places to live.
It's a complex situation with unintended consequences, and it really highlights the interconnectedness of different policy areas, how decisions in one area can ripple through the entire economy and affect seemingly unrelated aspects of our lives.
It's a reminder that we're all part of this complex system, and that our individual choices and actions, as well as the policies of our leaders, have far-reaching consequences.
Absolutely. It's something to keep in mind as we navigate these turbulent times. Yeah, it really is a crazy time to be following the markets. Lots of twists and turns, that's for sure.
It definitely keeps things interesting. So much happening all the time.
That's the thing about the global economy. It's constantly changing and evolving. And we're here to help people make sense of it all, to connect those dots and pull out the key insights that can help our listeners navigate these uncertain times.
Couldn't have said it better myself, and I think we've done a pretty good job of that today. We've covered a lot of ground, from President Trump's policies and their impact on trade and crypto, to the challenges facing companies like Intel and the rising cost of rent.
We've seen how seemingly unrelated events are actually interconnected, how decisions made in one part of the world can have ripple effects across the whole system.
And we've highlighted how important it is to stay informed, to understand the big trends that are shaping the economic landscape.
It's all about knowledge, right? Especially in a world that's changing so fast.
Absolutely. So as we wrap things up, what's the one big takeaway you want our listeners to remember from today's deep dive?
That's a good question. I think the main point is that the global economy is in a state of flux. We're at a turning point, and the decisions we make today, both individually and as a society, will determine what our economic future looks like.
That's a powerful message. And a reminder that we all have a role to play in shaping that future.
Exactly. Whether you're an investor, a business person, or just a regular person, your actions have an impact.
Well said. Okay, so on that note, we're going to wrap up this deep dive into the major financial magazine headlines. I hope everyone found it informative and thought-provoking. As always, it's been a pleasure chatting with you.
Likewise, it's always a fascinating conversation.
And to all our listeners out there, we'll see you back here tomorrow morning with more headlines from the world of finance.